Good afternoon, Boutique Hotel Nation. Coming to you live from Lafayette, California. I'm your host, Adam Walz, and thanks for joining us again on this show where we explore this magical jump, sometimes terrifying jump from short term rentals into the world of boutique hotels. Man, have we got some updates to share with you. A little bit of pain this past week. So let me welcome in my mister from another sister, Micah Thomas. Micah, how are you doing, sir?
I'm doing about as good as I can do today. I'm just trying to put one foot in front of the other. We like you said, we had some very, very big news come over the weekend, and I'm excited to share it. It's definitely painstaking, but I think it's a learning experience. I think there's some big takeaways away from it. And we're just going to keep moving forward. So I don't know if you want me to break the news or
So
if you want to break the news.
yeah, well, I love that attitude, man. And it's all, Mike Sjogren and others talk about this. That's all mindset. As much as we want to get into the tactics and like, what should my LOI document say? And which locks should I use on my doors? Like all that stuff's cool and interesting. But so much of this game comes down to the mindset. I'm reminded of a clip that I watched recently with Alex Hermosi talking about, when you're running a marathon, people are there at the beginning to cheer you on. And like when the gun cracks and you go off, and people are there at the end, right? When you cross the finish line. But for 25 odd miles, you are alone. And this is
Yeah.
actually when you wish you had the crowd. So I feel like we're a little bit in this moment, right? Where it's a couple months in, we've told a lot of our friends or families, a lot of people have kind of celebrated, hey, this jump into this space. And while there have been weeks where we have been on high, I feel like this is one of those weeks kind of on low. And I'll maybe, yeah, break the news, quote unquote. And then yeah, get your kind of your color commentary and like where your head's at. But again, our
Sure.
purchase price down in Arizona about $3.3 million. Again, if you talked to us a couple months ago, we thought the total project was going to be about 4.7 after we roll in kind of renovations and working capital. Fast forward a couple months, an inspection report later, finding out our roofs are at end of life. There's tons of plumbing issues, just probably $500,000, quite frankly, on like critical infrastructure, not sexy stuff, but stuff that's going to help your asset perform well for 10, 20, 30 years. It just needs to be taken care of. Um, and so anyways, we've, talked about increasing our budget, with Isaac and Joel and Rashmi and others. So, it was looking like this was growing to maybe 5.5, 5.8, something like that. Try and keep it under 6 million bucks. Just to make sure that we had kind of enough cash and that we could follow through with some of the GC bids, et cetera. Now, a week ago, 2 weeks ago, we were living high, man, because Mike and I basically through friends and family, had raised about, let's call it 700, 800,000 kind of soft commits from people who wanted to be on that equity side. And then we got introduced to somebody, again, works at a tech startup. I won't name names here, but had significant RSUs, wants to diversify away, thinks the stock market's pretty frothy right now. I mean, we're at like all-time highs. Liked hotels or luxury Airbnbs as a diversification play, and so anyways, this person was pledging, let's just call it over $1 million. I mean, large check. And so we thought we were kind of done, on the equity side. So our focus has been on the lending side, the debt side, just again, underwriting every single day, updating assumptions. We're getting back GC bids for the first time. So again, this is a dynamic breathing process. And then I remember where I was because I was at like a trampoline park with my kid at a birthday party. This is just yesterday, and we get a text, from our, the guy helping us do some of the capital raising, and basically it was to the tune of, XYZ is pulled out. So, anyways, maybe you want to pick up the story from there, but man, I will tell you, it felt like an absolute gut punch. There's so much uncertainty in this game, and I thought we were strong. I thought we kind of had the equity stack that we needed in place. So I was feeling really good. But where were you when you kind of took the news, and how are you kind of responding or thinking about this?
It's funny you say you knew exactly where you were because as soon as you said it, I'm like, I know exactly where I was when I read this news. It's one of those things that you see it and you wish that it's not true, but you know that it's happening and there's nothing you can do about it. So I was actually watching the Eagles game, and it was the
Ah,
first half of the Eagles game. So we were losing by a lot. So to add on more stress to my life, not only were the Eagles losing, the game we went on to eventually win, one of the greatest games I've seen, but just sitting on the couch. I picked up my phone. I read the news, like you said, and it just felt like a gut punch. All the wind out of my sail. Initial thoughts because again, we've been, working hard, raising capital. We felt like we've reached our goal of the capital we needed. We really haven't looked at raising more capital for the last 2 to 3 weeks because of this. So to hear the news that a big investor backed out, we got to go back to the drawing board. We're getting close to our money, our earnest money becoming hard. We're getting deeper into the under contract phase. So something that's very uncertain now, and as far as like raising equity or capital, a little bit concerning. But like I said earlier, I don't think this is the end of the road. I would be remiss if I said we need to just throw everything away and start from ground zero again or try again another year. We have to keep pushing forward. We still have several good leads, not just on the equity side, but also on the debt side. We have several connections that we have yet to reach out to or follow up with. Um, to try to get the deal done.
yeah.
And I think one big thing to point out, especially when it comes to purchasing such a large asset, and that being a boutique hotel, is there's a lot of parallels that are going on at the same time. So just because one thing is not going well, there's several other things that could be going well. For example, we may be getting renders back from the interior designer this week. We're going to
Hmm.
hear from the seller about creative financing, possibly a seller finance structure. We're going to get more GC bids back this week and probably decide on our general contractor for the project. So one failure, but I'd say a lot of other positives. And there's a world where we just needed to make a connection back with the large investor, and maybe he's back into the deal. So I think that's how I feel. I would love to hear kind of what you think and what are your takeaways from it, knowing that we're in this vulnerable spot.
Yeah. So I think that's a good metaphor, that it's halftime and we're losing.
Yeah. Yeah.
The game's not over, but it hurts. It's not where we wanted to be. And even in the first quarter, we might have been winning, right? So how
Yeah.
fickle sports are, how fickle sometimes business can be, where, it kind of, to me, it reminds me of like stock charts,
Yeah.
it's never just, up and
Linear
slow and
growth.
steady to the right. It's always this up and downs and volatility.
Yeah.
So can you kind of ride the dragon, and kind of flex and adapt as needed? So again, I think it was really useful to hear, again, we're kind of hearing this secondhand through some correspondence, but one of the reasons was we were too slow, right? So again, had a really good conversation and we didn't immediately follow up. So like shame on us for not like closing the loop or just playing back. Here's what we heard. We wanted to take a little bit more time to come with basically like a clear, simple offer because there are so many variables, and so much of what an LP would return depends on assumptions about future performance. So we're kind of, we think we're going to be somewhere in here, and this
Yeah.
is roughly the range you could expect. And,
Yeah.
again, we can't guarantee returns, but we can make, uh, we can create some financial models, create some assumptions, a range of outcomes, and kind of
Data-driven
how confident
assumption.
we are. Yeah, yeah, data-driven assumptions. So again, we were too slow and we didn't follow up. So I think kind of shame on us. Number two, I think was, if anything, we gave too superficial. I really came back with like, hey, you put in X, you get Y, a little bit of intro, a little bit of outro, but it was like dead simple. Um, it was too simple, actually. Like, one of the other pieces was like, this feels superficial. If I'm going to be investing X dollars, I would want to see more rigor in data analysis. So again, we had that. We have been doing that. That's actually what caused some of the delays in getting back to him, was punching this in from kind of our more rudimentary spreadsheet into the BHS sophisticated financial calculator that has like 12 tabs, has all the IRR kind of automatically calculated for you. So
Right.
for a long time, I think a lot of this stuff kind of went over my head. I could screen a property, could do back of the envelope math on a property. I created my own spreadsheet to just kind of understand how cash flows would work based on different performance levels. But this is kind of a pro tool that quite frankly was a bit intimidating at first. But it was time, right? After kind of getting that verbal, yes,
Yep.
I'm interested. We took a week working with our advisors and coaches to make sure that we were kind of doing the right thing and that it was popping out with kind of the same assumptions. But I think we kind of went dark, and we didn't. I think the lesson here is, always over communicate. I mean, like put yourselves in their shoes, and like we don't want them to be coming up with questions or wonder what those guys are doing, or I'm not sure if this is a good deal, or if they're not communicating with me now, what will it be like 3 months from now? So again, we've got a little bit of a recovery strategy. This person also thought by potentially increasing the pool by X dollars to honor some previous commitments from other investors that we would be diluting him. And that actually wasn't the case. So his returns are actually going to be exactly the same. But I think that was the read, right? Was um, we were we were kind of banking on, right, a relationship from someone else. We're kind of having a conversation through intermediaries or a capital raising partner, and anyways, like I think some tremendous lessons learned here. Let's see if he truly is out, or if we're able to kind of recover. But I think this is a really interesting chapter. And by the way, we've seen both sides from Boutique Hotel Secrets. Like, I think we're going to have Pete and Eric. I'd love to have those guys on the pod pretty
Yep.
soon.
For
For
sure.
example, they just went to a bank, got debt, and then the seller provided the rest. And they're done. And they don't need to do any of the
Absolutely.
shenanigans that we're up to. But it feels
Absolutely.
like in our world, because we got such a steal, we proposed some creative financing to the seller, and they initially said no. But now we've gone out to 50 plus lenders and got no's, not because of us, but because it's a negative cash flowing distressed property in a rural market, and it's hospitality. And it's independent, by the way. This is not a Marriott
Yep.
downtown Nashville. It's
Yep.
riskier. So there's just a bunch of people saying no's that never even get to our business plan. Um, and so, anyways, I think in this game, it's becoming clear that, I mean, your investors are precious. I conceptually knew that we needed to handle them with care, and I thought that's what we were doing, but already we may have broken an egg. And so let's see, Micah, if we can still make omelets, or if we got to go back to the store and find more eggs. But I don't know.
Yeah.
Any reactions, or do you want to build on any of that?
Yeah, I mean, like you said, investors relations, I think both of us we are very cautious, and we definitely want to have that fiduciary responsibility to make sure we're putting our investors first and we're taking care of their money. We're pretty much taking care of part of their livelihood. So this is something that I think both of us are taking very serious. But again, in this specific case, I think we may have responded too slow or may not responded the way the investor would have liked, but it's a learning experience. And I hope that it's a learning experience that we can recover from for this specific investor. But if not, we know moving forward that this needs to be handled with even more care than we once thought. So, um, no losses, only lessons. I think this just makes our case stronger and it makes our relationship with investors better moving forward. And I'm excited to keep going. As stressful as it can be, as demoralizing at times it can be, I think all of it will be worth it if we can get this deal across the finish line. We both know why we're doing this, and we both know how good of a deal we have. So that really just is the main motivator for me at this point.
Yeah, and I don't know how typical or atypical this is. I guess every story is its own thing, and so this is ours. So again, we want to
Yeah,
kind of share the highs, we want to share the lows, but
yeah,
in the back of my head, I'm like, probably for most operators, you have one of the two puzzle pieces. You either have the debt or you have the equity, and then you go try and solve for the other. But in this case, it's been kind of, at least my perception or feeling is like it's maximum uncertainty, because we're trying to parallel track both things.
yeah,
Like we're looking for investors and explain the equity and tax benefits and bonus depreciation, like all the upside of why you'd want to be in to a commercial deal, and why boutique hotels make even more sense than investing in luxury Airbnbs, for example. At the same time, going to the banks and trying to create these conversations around, okay, if we're not a good fit for conventional lending, we're not eligible for a DSCR. What are we eligible for? So, I mean, looking at SBA, looking at, I got off the phone on Thursday, and he was like, we could probably go up to $1 million. I know you need three, I'm like, I just don't think the deal can support $4 million of equity. I know it can't. So, it might come down to some sort of gap funding or bridge funding or God forbid, hard money. So like, we're just learning about the entire range of solutions. Obviously, I think one of the pieces of counsel I think we've gotten from Isaac that we're really trying to take to heart is like you can get there, so have confidence that you can get to the finish line and win. It's just the cost of capital. How much is it going to cost you to get to that finish line? How much of the deal do you have to give away, right, to kind of find the right partners or find the right capital?
Yeah.
Um,
Yeah. I think that's exactly right. Um, it's not, I don't think it's a matter of if we can get the deal done, like you said. It's just what will it cost? Do we want to go with a 12, 13, 14% interest loan, 12-month, 24-month style bridge loan gap funding, or do we want to go with that senior to traditional debt? And just for people who may not know why we can't secure funding, most banks don't have an appetite for hospitality, especially as we're going out of COVID or coming out of COVID. And a lot of those loans that were refinanced or kind of put in forbearance, they're becoming due the end of this year, starting the beginning of next year. So banks are taking a loss on those loans and they're not really eager to make new hospitality loans because of that. So if you think about that, on top of our property being in a tertiary market, on top of the property currently negative cash flowing, and it's not a flagged hotel or a franchise hotel, which offers a sense of uh, safety to the bank. So, not to say that this is a bad deal, but it may not be the best deal for the bank to take on. And when it comes to like risk aversity or risk appetite. So, we really think the deal it still pencils very well. The numbers make a lot of sense. It's just a matter of securing the financial pieces to make sure we get the deal across the finish line. So again, I'm very confident that we'll get this deal done. Just a little bit of adversity. Boutique hotels, it's not always sunshine and hot tubs and barrel saunas and a drink at check-in. There's some nitty-gritty things that happen on the other side that I think it makes sense to share with the audience just so people don't think they're gonna run this just as easy as an Airbnb or they're gonna step into it with no problem. I'm sure plenty of people do,
yeah.
but currently that's not our reality. And I don't think that that changes anything for us, but it's important to note that this isn't an easy journey for us, a journey nonetheless, but it's not easy the entire time.
Yeah. And do you want to talk maybe a little bit about this idea of either assuming the seller's existing debt on the property or doing like a subject to deal? I know Pace Morby and others talk very frequently about this. So
Yep.
again, we got the inspection report back. We got the first GC bid back, and we're going, holy cow, there's
Yeah.
a lot more here that needs to be done. So I think initially, if I'm not mistaken, we were kind of angling towards, man, like we kind of don't want to retrade or renegotiate off the price, but we'd like send some texts, set up a meeting. And again, this seller was not open to any sort of negotiation. It was kind of kick rocks. If you can't meet my price, I'll
Yep.
take it back and do my own thing. They own a lot of hospitality projects, so
Yep.
like we tend to believe them. But do you want to talk a little bit about that strategy of, because I'm
Absolutely.
guessing other people out there in the future, right? If you truly find this diamond in the rough and it's mostly rough today, and a bank won't lend on it,
Yep.
this might be an option, right? To find out or have a conversation with the seller about what they owe on it. Now, of course, if they
Absolutely.
owe nothing on it, we've got another student, Vinny and Karen, for example, where I think that was their case. Somebody bought a property 30, 40 years ago, free and clear, and they're able just to become the bank and just take payments over time. That's great. Our case was a little bit different, where again, we're trying to buy it for 3.3. We found out he's got a $2.8 million existing loan against the property. So why don't you explain a little bit of maybe our strategy about taking over payments?
Yeah, for sure. So, yeah, like you said, we were able to meet with the seller last week. I sent a text message to him probably earlier in the week asking if we could meet later in the week. And the first thing he replies is yes, but I'm not willing to change the price. The price is what it is, what it is. It's as is. So it was like, oof, like he's very resistant to
He
the
read that
thought of
play.
retrading. Yep. So very, very quickly we understood that. But I still think there was a conversation to be had because the only reason we were pursuing traditional financing is because he was not open to any type of creative financing. So really the pitch to him was, if the banks can't do it, what other strategies can we use so we can both win in the situation? He ended up telling us how much money he had left on the loan. So the pitch was, what if we did this in like a wrap or a subject to deal where we make payments through a third party escrow company on your behalf? And then there's a balloon payment at the end of 4 or 5 years or something like that, where you get the entire amount. But what this does is it allows us to improve the financials, improve the property condition, and then get traditional financing to refinance him out of the deal. And part of that is him believing in us, which I believe he does. It's just a matter of him talking with his partner to see if he would like to do that. So I think it's a very lucrative strategy. You can either assume the debt if you go through the bank, or you can very well avoid the bank and do a subject to deal where you don't have to go through the bank and it's totally legal, and we make payments on his behalf. So very interested to hear what he says about that. Hopefully, the next time we get on the pod, we can have some good news in that regard,
Yeah.
maybe even on the equity side. But this is a strategy that we just didn't know existed in our deal because the seller was initially against any type of creative financing. So I think it was a little bit of a convincing factor once we told him how many banks we reached out to, once we told him the condition of the property, the condition of the financials, because frankly, I don't think he knew how bad the property was doing because he has so many properties. So letting him know all the cards that were stacked up against us, and the banks weren't even taking the time to get to our business plan or our pro forma because they couldn't get past what the property itself was doing today and in the past year. So
Yep.
excited about that. What do you think? What are your thoughts on subject to and our financing?
Yeah, let's see. And again, if somebody's asking why would somebody even agree to something like that? Well, number one, it helps us him perform and sell the property, right? So if it's not just us, if anyone was trying to buy the property and couldn't get the debt position, then it's just unlikely that this will transact unless somebody's coming in with like an all cash deal or something like that. So it strips away some of your buyer pool. But I think the second piece is again, it's collateralized by the property. And just like the bank, if we miss a payment, you can take it back. In fact, we put a performance clause in there to say we can
Yep.
skip foreclosing or doing all the legal stuff, make it very easy for you to basically take back the property, plus any payments that we've made and any tenant improvements we've made. So if we're
Yep.
literally talking about 1.5, $2 million of tenant improvements on a project that we think is already the implied value is closer to 5 million. I mean, again, that's why would somebody say yes to this? Well, helps them sell it. They, again, get most of their money back, or at least get out of the loan, stop the bleeding. This place is cash flow negative every single month, and just eliminates the headaches, lets him move on to bigger and better projects. And he's got some insurance, right, that we're going to perform. And if we don't, he gets the property back. And I've actually met people that have done this, sold a business to somebody. They basically can't make payments. They have to give back the business. And one of my buddies up here, his dad sold his business 3 times this way. So it can actually be quite lucrative, just to kind of keep boomeranging out. So, anyways, look, we'll keep, our commitment to you is to keep sharing kind of as candidly and transparently as we can. We obviously want to feature, our coaches' perspectives, other students' perspectives, but we want to share our story as well. And this one was a bit of a dip, to say the least. So we'll keep you posted on the other side of this. Again, as lending on the debt side becomes clear or the equity side comes clear. And we hope, maybe on your first deal, you could just get to skip all this stuff, collect $200, go, you land on Boardwalk and all is easy. But yeah, I kind of feel like we're in jail right now on the Monopoly board. The game's not over. It's halftime, like you say. I can't root for the Eagles, but by the way, the Seahawks
Nerds.
crushes. But this reminds me of fantasy football. Last week I went 3-0 in all my leagues, and this year I went 0-3. And such
It
is life.
happens.
Such is
It
life.
happens.
So, anyways, okay. If you hate the sports metaphors, thanks for hanging with us. Whew, troopers out there, OT Cotel Nation. So, anyways, yeah. If you've got follow up questions, if you want to DM us, if you've got ideas for other speakers, other topics, other things that you'd like to know about our deal, we're happy to be as transparent as we can. So, any closing words or remarks from your side, Micah?
last thing I'll say, I saw it on a commercial during the Eagles game to make matters worse. But the commercial basically says whether you decide that you can or you decide that you can't, you're right. So it's ultimately up to you. So that's the
Yoda.
last thing I'll say to end with.
Oh, I like that. Hashtag Yoda. That's the pod. Thanks, guys.
All right, later.